Hi, I'm Allie Zendrian, Editor-in-Chief of Brand News, and this is the Financial Services News You Might Have Missed podcast. This is where I uncover news gems that might not have gotten their full chance to sparkle, and I list them off a little bit. I'm joined by my trusted co-host and personal financial advisor, Brandon Galisi of Galisi Financial. Apparently, it's a chilly 63 degrees in California. How are you doing?
I'm doing well, first of all, Allie. But I totally acknowledge, being from the East Coast, how now spoiled I am. And I still understand that pretty much everywhere else, 63 is going to be like shorts and t-shirts weather. And that's growing up, wintertime. If it was 60, absolutely wearing shorts and a t-shirt. But for those watching our podcast, I'm even in my Galisi Financial hoodie today. It's just a little chilly, little moisture in the air. Unfortunately, Pearl is probably going to be a bit bummed because when it rains, we don't always go on our WAOK. She's in my office, so can't say that out loud. But overall, it's been a good week, even if it's now a little California chilly, we'll call it.
Well, I was only laughing. It must be great to be a weather person because you can project somewhere between 6 inches and 18 inches of snow this weekend and just be like, it's in there somewhere. But yes, so 63 I would give for it. But
it's at least a good spot to vacation to in the wintertime to save yourself from some of the New York snow.
Oh, totally. So for anybody who regularly listens to this podcast, hi, you'll notice that this week we're only going to have 3 pieces of news, but mostly because I thought that they were so meaty that they needed their time to shine. So our first piece of news is from AdvizorPro. This AtoZ communications client released a report evaluating the movement between various channels within the wealth management industry. So that would mean broker-dealers, registered investment advisors, duly registered, things like that. I totally can't do justice to the report on this podcast because, as Brandon can attest, it was quite lengthy and it would take up a heck of a lot of time. So if you are interested in learning more, you can go to AdvizorPro. That's advisor with a Z, pro.com to check it out. But among the things that I found most interesting with this set of data was that more advisors were leaving the industry than coming into it. So in 2021, that was very noticeably the case with a 13,000 advisor gap. I mean, all things considered, that was really right at the pandemic. So I sort of feel like that's just to be expected. But that was also the case in 2022 and 2023, where there were more advisors leaving than entering. And then you've got 2025 doing the same thing. So I'm a little like, what's going on here? I would love to get your thoughts on that and the voluminous report.
So I thought the report was very, very in-depth, and there's a few things that jumped out to me as well. As far as some of the advisor outflows, I guess I don't necessarily have as much of a theory on that. I think you're onto something with there could have been even, I might use advisors with parentheses, if someone's just a salesperson, commission only from day one. Don't know how much that's impacted, where some of these companies will hire someone, give them training for a few weeks and say, all right, here you go. And then it's kind of an eat what you kill model. And if you don't sell typically insurance products, then you don't make money and then you phase out. So I don't know how many of those advisors could be considered in the net outflow, where they might not have even made it a year or 2 years. Again, I don't know. And maybe the data, it actually did say that somewhere, but I didn't see it. So I think that kind of is what jumped out. But I think too, if also as an advisor, continues to give me confidence, because we know that the average age of advisors hasn't really gone lower in the last several years. The last I checked, it's somewhere 50-ish. In the 50s for sure, right? So at some point, for those folks probably are going to retire. I'm not 100% sure, but if nothing else, I think, again, my opinion, I'm biased, but the demand for financial advice is only going to continue to grow. I'm not worried about AI. We've already talked about at length on the podcast there. So maybe that's just less advisors, even less competition, I guess, potentially maybe some clients getting underserved because there's simply less advisors. But yeah, I did find that pretty interesting too.
Well, that's what I was thinking. Is this the like great retirement or a time when advisors are really exiting? And like you're saying, whether that's the case or just people wrong fit, you try out different kinds of jobs, things happen. As somebody who's done that herself, I can't really complain. But so even then, more people should be looking for financial advice. And then my concern was basically, okay, so then where do you go to other than to try to chat GPT your way to it because there aren't enough advisors to do it?
Right. I feel like it really is tough out there. I even have, of course, the insight of being in the industry now for, I think, 7.5 or 8 years or so. And if someone gave me almost no context, like, well, how would you go find an advisor? I would have some general ideas, like make sure that they're a CFP professional. But although we've talked about before, we love the CFP board, just having the marks alone doesn't guarantee that someone's a good advisor. So it would really be tough as a consumer. I mean, I really could not imagine where typically for me, if someone comes to me and say it's a friend and they don't necessarily want to work with a friend for financial advice, I'm always happy to then refer them to my close circle of people that I personally trust, that are pretty much all CFPs, great planners, great integrity, great businesses. But if you were just, hey, I want to hire a stranger, what do I do? There'd be maybe a few things to look for, and I could probably share some questions maybe to ask. But beyond that, if you're a consumer, kind of good luck. It's
Yeah.
tough out there.
It is. But as I mentioned, the report was quite long. Was that the part that stuck out to you most, the outflows and the inflows, or were there other parts that drew your attention?
Yeah, so I think that was interesting. Another thing that drew my attention was the fact that there was a lot of RIA growth. So a lot of advisors had been leaving. The broker dealer only channel was the most. They've been consistently losing a lot of advisors. That completely makes sense to me because the broker dealer side means they're not, if they're broker dealer only, they're not even typically doing fee-based managed money. So I don't know even what the value proposition is in that business model anymore. I mean, you're basically commission only to buy A-share mutual funds or charge a commission on stock trades, which are now free on the internet that you can do by themselves. So I think that's just that side by itself. Absolutely a dying business. That's what we see the numbers. But again, I'm biased, but not surprised that RIAs are continuing to lead the way. I think even the hybrids, which would be you're technically at a broker dealer, but you're also an RIA at the same time, where you're fee based. I'm not surprised that that's still a large subset, but I think we're just going to continuously see more of those advisors shift more into the RIA space because they're realizing I'm not selling these A shares anymore. I'm not doing stock trades on commission. What value really is there in the BD only side? And there's not a lot. I'm not saying there's none, but the next generation, or at least the clients that I'm working with, aren't going to go work with a true broker in the classic sense. They're simply not. But they want ongoing financial help. A lot of people would still prefer to pay a percentage of their investment so that they can get some good financial advice as well. So again, it wasn't surprising, but if nothing else, it was more confirming that we continue to see RIAs lead the way. Yeah. Did that stick out to you, or did you see that, or add some color?
Yeah, so I agree with you. I think the amount that it was growing was a little shocking to me. I figured that it was a little more a slice of the pie versus you are markedly growing and basically everybody else is either standing still or shrinking. So that was a little surprising to me. But you mentioned basically what's the value proposition of a broker dealer. And I wonder, and this sort of leads into our next piece of news, if it's just basically like that training ground for people. Like, look, you got to go somewhere to figure out how to do all of this, to interact with clients, what kind of sales techniques work, whatnot. Is this the place where like you go do that and you collect a paycheck? Maybe.
Right. Yeah, maybe. Even there though, a lot of them are BDs and RA hybrid now. A lot of the big firms are both. So they clearly do exist, but yes, I don't even know how you're recruiting anyone into that model at this point. I mean, your target market would have to be an aging population who isn't going to be able to buy an investment online by themselves. They don't necessarily need any sort of advice beyond just having my broker. So that's very interesting. Again, I think a lot of the training ground does happen in that BD REA side, the hybrid, and then folks, I think ultimately. But again, that's just my anecdotal experience.
I mean, that's more than what I have because obviously I'm tangentially in financial services, but so greatly appreciated there. So as I mentioned, that sort of leads into our next bit of news. So this is also an AtoZ communications client, the Financial Planning Association. Frequent listeners might know they've got a lot of exciting things going on this month. So shout out to them. The FPA announced that registration for its spring residency program has opened. It's one of the only, if not the only group that gives experiential, intensive, immersive learning opportunities for new CFPs in each of its two sessions. So there's a fall one and then a spring one as well. There are 35 either new CFPs or those people who are about to sit for the exam, go through case studies and get individualized real-time feedback and other learning opportunities. So when I saw this, so as somebody who actually went to grad school because I felt that I didn't learn enough in undergrad, I'm going to go into a profession that like I could get myself in trouble somehow. Maybe I should go somewhere safe and learn about this a little bit more. I felt like this is exactly what I would have appreciated. But obviously, I am, again, tangentially in financial services. What would you think about a program like this?
I love it. I think it's brilliant. I think there's only so much that you can learn. Say that you even go to a wonderful college. I went to West Liberty University, was not a CFP program then. It was very close. It now, in fact, is. And I think they had their first student pass the CFP exam after graduating college earlier this, or rather last year, as we're recording in January now, which is super exciting. But even with that, I did feel like I was ahead of a lot of other advisors just because I was already learning about Roth conversions and investments and all this nitty gritty detail tax. But still the experience aspect, like for me, even going to a master's or even a PhD in financial planning wouldn't, in my opinion, give me as much value as even what I did was I kind of got thrown into the deep end effectively and started working on clients after like a 6-month training program. But the fact that there's this residency program, the key word that you mentioned there, Allie, was experiential,
Yeah.
I think is incredibly valuable because these, I'm going to say kids, maybe they're coming out of school, or maybe they're career transition, so maybe not all, but we'll say the newer CFPs, they're going to be brilliant. They're super sharp. They're going to know a lot about financial planning just from whatever coursework they've gone through, or the CFP coursework in particular, but then being able to take, we'll call it some book knowledge, and then being able to start to apply it to real case studies and have real-time feedback. And again, getting that experience. How do you communicate to a client? Because there could be times that might be the quote unquote optimal path from a mathematical perspective. But if you actually know that client, you know that B is going to get buy-in and is going to move them closer to their goal because they might not even do A, even if it's mathematically optimal. So just being able to learn some of that from experience, I think is huge. So this sounds like an amazing program.
So the experiential part of things. So I think, like you were saying, speaking to a client, you don't realize until you do it a few times, and I'm sure even a few hundred times, the words that then all of a sudden trigger somebody the wrong way, or you step on yourself and all of a sudden you made a flub and it just sent everything south. So having those kind of safe places to like, look, I'm going to do this. How do you respond to me? It's completely different than having to look at a textbook and say, well, the answer is that we should do a Roth conversion.
Right. It's just there's only so much that you can learn through a textbook. And I believe this is true in nearly any profession. You have to have a baseline knowledge. I don't think someone should just not learn anything about finance, for example, and be like, oh, I'm just going to jump right in and just get only experience. We see a lot of the multi-level marketing companies out there, even in the financial services space, try to do this, and it ends up being a pretty big nightmare. I'll save my fancy feelings for a separate podcast on that topic. But textbook, great, good foundation, get that experience. Like I know for me, I'm constantly learning. I learned a ton in the last year. I learned a ton in my 7 years. Every single year, I feel like I just learned so much. And if I were to look back even 2 to 3 years ago, I'm like, oh my goodness, I feel like my breadth of knowledge is better. My depth of knowledge is better. My client communication is so much better. And we're talking just in a matter of years. And if folks are able to start early, that's a lot of learning over 20, 30, 40, 50-year career that, it's going to be pretty sharp here in the next several years.
I can't imagine another way that you could like create sort of a dummy person and say, okay, well, this is how they're going to respond to you, but no real financial transactions are happening. How do you mirror this other than, look, I just have to drop you in the real world and like, good luck, Godspeed. So agreed. I think that having somewhere where you can really practice these kind of things, you're getting real-time feedback so you can correct yourself right in the moment. Hats off to the FBA.
Right. And it's a great organization too. So you know that you're getting great people in there that are going to be mentoring these 35 people as well. So you get great mentors. I'm confident that there's going to be great folks that are either CFPs or getting ready to be a CFP. So it's really, really, really cool.
Our last piece of news this week was from Balance Homes, which relaunched in part thanks to a $30 million investment. This group helps people who are trying to helps Americans who are trying to stay in their homes have more equity options to do so. So what I found interesting was the data that they had in the press release. So this was from the Federal Reserve Bank of New York's household debt and credit report for the third quarter. It showed that total household debt grew by almost $200 billion from the second quarter to the third quarter. It also said that according to the Consumer Financial Protection Bureau, almost half of HELOCs were denied last year. So that seems like it's just one of these situations where people are getting squeezed. You're trying to lean on an option that you thought that you have. Half the time you're getting denied. So how do you sort of solve this problem? So Balance Homes is offering some kind of equity sharing model, and I'm not going to lie, I felt like that was way above my pay grade. So if you have any knowledge on any of that, I would super duper appreciate it.
I actually had not heard of this until you sent me the article, but I was intrigued. So I'm like, okay, let me do a bit more research. Let me explore more. So at least my understanding, and again, not trying to claim that I'm the expert in this business model, but effectively what they're doing, instead of that HELOC where you have a $500,000 house and you owe $300,000 on your mortgage, you have now $200,000 of equity. With a HELOC, if you're able to get approved, which typically they're looking at your debt to income ratio, your income, things of that nature, to see, is this person going to be able to, if we give them $100,000, are they going to be able to pay it back? Is effectively what these lenders are doing. So last year, it sounds like with a bunch being denied, they believed at least this is a bit too risky for us, so we aren't going to give that. So it looks like this company will come in and actually buy out or become an equity partner in your home. So instead of in the HELOC, you still 100% own your home. You just now have to pay back to the lender. This company Balance becomes effectively an equity partner. So think of it like our businesses, where say that you or I had a cash crunch and for whatever reason we're tapped out on our credit, we could not get more credit, but we need more money. We'd be able to partner with partner with someone. They might give us $100,000 for 10% stake in our business, just throwing out a number. But then they'd own 10% of any of our future profits, so on and so forth. So that I felt was interesting. So you don't even fully own your home at that point. So Balance takes a portion of the upside with you. So now with that one, first, do you have any clarifying questions? At least that's based on my understanding. And then if not, I'd love to hear your thoughts now that we've added even a bit more color to it.
Well, so now that I understand it, so I could understand how, I guess, in the pressure of the moment when it seems like, well, what else am I going to do? This seems like a viable option, but it seems like long term, based on what you're saying and my limited understanding of what you're saying, that then like you're sort of screwing yourself in the future to help yourself right now, which I mean, people might need to do. So who am I to judge? But that's, to me, is what that sounds like.
I'd say that's pretty spot on. Like I'm trying to rack my brain, like just, okay, when would this really make sense? And it really is, you can't access a HELOC anymore. You're maybe going to potentially face foreclosure. You can't make your mortgage payments. So it is more of a, at least from my interpretation, exactly what you said. It's a short-term solution that maybe, like, it is not going to be option number one. At least I can't see very many situations that this is truly option number one, because another thing that I even in my research figured out, each contract can be a little bit different. But say, Allie, you do this and you want to do a kitchen remodel. Well, you might have to get permission. You don't fully own your house, right? So now normal maintenance stuff, because they do also share in some of that maintenance. So likely instead of your mortgage being, say, $2,000 a month, maybe you're only spending $1,000 as part of like splitting property taxes and whatever else to this company. So you might free up some cash flow in the short term. But, and again, minor maintenance stuff, yeah, you're going to share in that too. But if you want to totally redo your kitchen or your bathroom or remodel, you probably are going to need to get written permission to do that. And then they're going to somewhat be on that project because it's their investment too. So even just starting to, when you get into the nuances, your statement becomes even more and more accurate, right? So, yeah.
Well, just imagining, so having redone my basement and my kitchen, not because I wanted to, but because of a flood. So now imagining like, wow, I've got to like run, I presume, paint colors and things I can't even, boggles my mind.
Yeah, I would like to hope that you could be pretty flexible on paint color, but I'm sure there's a lot of things like, oh, what specific appliances, or maybe you want nicer countertops or nicer cabinets, because again, nicer flooring, you live there. Like you want this to be your house. And yes, we want to be mindful of, is this renovation going to add value to the home? So we're not just dumping money into our house and not even adding more equity. But there's certain cases when you live there, you're an owner, you're not thinking like an investor. Versus if you have an investment property, which is essentially what this company is doing here, what are they caring about? The profit. Like that's the main, the bottom line, right? So I feel like it could potentially, you could be a bit at odds with what both of you are truly trying to accomplish in this scenario. So again, no, Allie, you were 100% spot on with I think, let's see if I can get your quote right. It was screw yourself in the short term, or no, good in the short term, screw yourself over the long term. You said it more eloquently than that, but
no, that was
TLDR. You were that was a spot on statement.
Yay! I love it when I understand things that you say. It makes me feel so smart.
No, again, you had it.
Thank you. Well, so thank you so much for explaining all of that and giving people some perspective. Because obviously, if you were thinking about this kind of opportunity, maybe second guess or at least do your research and make sure that you're informed before you do it. And thank you, as always, for being the kind of person who takes these opportunities and does extra research and actually really cares about what they're saying.
Yeah, absolutely. No, this was a lot of fun. Again, I hadn't heard of it. I'm like, oh, this is cool. I've already texted one of my buddies about it, and we're kind of going back and forth too. So it was a fun kind of thought experiment for me as well. So thank you as always for always coming up with great news. And yeah, for those that are listening, we might have only had 3, but like you said, Allie, we love to talk, and we definitely filled our time. So hopefully,
Yes.
those that are listening to this point have found it valuable too.
Thank you.
Yep. Thanks, Allie.